Thank you, Krab. Welcome everyone to SET Digital Roadshow or SDG. Thank you for joining us. On this session, we will update the third quarter of 2025 and 9 months of 2025 performance, along with the activity from each business unit. We will begin with the keynote from our CFO, followed by the business update and summary by the IR team. After that, we will open for the Q&A session. Without further ado, I shall pass to the CFO for the keynotes and executive summary.
Good afternoon to all fund managers and investors. First of all, thank you very much for joining today's session. Before I go into the Q3 and 9-month performance, let me begin with summarizing our immediate action plan and key highlights from the third quarter. As we have mentioned all along, financial discipline and stability are our primary focus. Firstly, we are now in a deleveraging mode. We focus to drive our leverage back to our medium-term target range. That means to control the capital allocation and accelerating working capital release. Second, we focus on generating consistent, strong cash flow. For 9 months of this year, we generated about 44.5 billion, up 15% year-on-year. Third, it's about selective divestment and restructuring of the non-core assets. This is to concentrate the capital where we have scale and advantage economics. Last but not least, we remain committed to delivering dividends to our shareholders. Our ability to pay dividends is supported by our strong EBITDA level performance. Plus, we have cash on hand of about 50 billion baht at the end of Q3. We have stated that we'll focus on financial stability and deleveraging our balance sheet. These slides show a summary of the financial accomplishments during the past 12 months. At the end of September 25, we have cash on hand of about 50.6 billion. Our net debt to EBITDA reduced from 6.3 times, now down to 4.7 times. Our net debt reduced by about 32 billion baht during the last 12 months. Interest expense also reduced by 193 million baht, comparing 9 months of this year versus 9 months of last year. Working capital, thanks to all business units, we were able to reduce it by about 22 billion baht during the past year. Okay, move on to the Q3 highlights. We achieved strong financial stability and deleveraging, as I mentioned earlier. Our chemical business remains in a very challenging situation, especially the PP margin, which has deteriorated recently. But good news is that our project in Vietnam, RSP, has resumed operation since August this year. For cement business, low carbon cement is doing quite well. Earnings was satisfactory despite a slow market in Thailand. The good performance of the cement business was due to the continuous effort on the cost management. For packaging business, the business remained quite resilient, especially those related to consumer. Looking ahead in Q4 remains very, very challenging due to a number of factors, including global supply chain disruptions, slowdown in Thai economy, and also the continued weakness in the chemical sector, as the Q4 is the low season. That concludes my part. Thank you very much once again for joining us today. Thank you, Ka.
For next, for the business updates, let's start from the SCC chemicals. In the third quarter of this year, the chemical industry is still facing the situation of the soft global demand, and the spreads got squeezed from the higher feedstock costs and also the regional supply additions. So this caused the regional player run at low operating rates. However, in the next slide, you can see that SCC Chemicals was able to run at a higher rate at about 85 to 90% compared to regional peers. And this includes the operating rates of our operations in Thailand and also the Long Son Petrochemical or LSP in Vietnam, which restarted in August this year. LSP is the first integrated petrochemical complex in Vietnam, and it can use the flexible feedstock, choosing between naphtha and propane up to 70%, depending on which price is more competitive. In addition to those feedstocks, in October last year, we announced the ethane enhancement project, which will add more feedstock option to LSP, as you can see in this slide. In general, the ethane is about $250 per ton cheaper than naphtha. And to use the ethane, we have completed the 3 main milestones that we have secured the ethane supply contracts and the shipping agreement and also the storage tank construction agreement. This needs the total investment of about $500 million, which mainly for the construction of the ethane tanks. And the project is expected to start up by 2027. And for the operations, we also focus on the high value added products or HVA and the green polymers, which have the additional premium compared to the commodity. As you can see in this slide, the product shown in this slide is the example of the HVA and also the green polymer. For example, the advanced recycled food grade resins that you can see on the left side, that we collaborate with the global MNC brands to do the food grade packaging. And for the next example is the high abrasion resistant HDPE pipe that you can see the picture in the middle. This the pipe that designed for the industrial use, for example, in mining. So it's very very strong, and we have used specialized for the industrial use. And another example is the Shilox, as you can see in the right side. It is the energy solutions used for in various applications. For example, it can be used for the cold chain logistics and also can be used for the data center that needs temperature control. So as of the 9 months of this year, the HVA sales portion attributed to about 60% of the downstream business. And this really helped SCC Chemicals to maintain the competitiveness even in the low chemical cycle.
Okay, we come to update for the cement side. You can see that the new regulation has been updated that cement sold in Thailand must be low carbon cement. SCG had introduced the first generation low carbon cement since 2020, which could reduce the emission of carbon dioxide by 10%, while the strength remained as of the OPC, or the ordinary Portland cement. In the mid of 2025, we have introduced the Gen 3 low carbon cement in the Architect Expo. The third generation could reduce CO2 emission by 30%. Next, we take a look at the market perspective. The infrastructure is the main growth of the Thailand market, which is about 5% plus percent from the last year, while the residential demand has been low. On the other hand, the ASEAN market, especially Vietnam, grew significantly. Other than the cement products, we have introduced the so-called smart value products, or the SVP, to capture the growing demand with the value to price products and offering. As you can see that we have variety of product of the SVP like cement, vinyl pipes, or fitting. Meanwhile, we'll still maintain our HVA or high value added products portfolio to offer the differentiation to the customers, such as low carbon cement, the recycled food grade of chemicals, the pipe grade, the ultra high performance concrete. That is our example. For the next one, not only the existing business that we updated, we also advanced into the clean energy business, so-called SCG Clean Energy. Currently, SCG obtained about 880 megawatt of the green power generation, which we pursue further in the future. In addition to the utilization of the generated green power, we also invest in the new generation of the thermal battery. The first unit was installed in Thailand and operated since August, result in a very high efficiency. Now, we're talking about the clean energy. I'm gonna go into the sustainability part. To pursue the SDG Net Zero pathway in 2050, we are on track to reduce the carbon emission, which the near target is about 25% in 2030. Meanwhile, we are preparing to embed the ISSB standard into the business operation and the disclosure. The next one will be the SCGP update.
Okay. Thank you, and good afternoon, everyone. The highlight for SCG Packaging, which is a subsidiary of SCG, there was a merger and acquisition transaction in the third quarter. It's basically to strengthen the competitiveness of the Indonesian operations, particularly at the downstream level. The size of this transaction is approximately 1 billion baht, and the result of this allows us, the company, to expand the portfolio towards the high growth and competitive consumer-related segments in, for instance, food and beverage and consumer goods. I think what happens here is that as we are relatively somewhat competitive upstream, we need to integrate further downstream. So the end result of this is that our downstream integration increases from the existing 18 to the expected 26%. So that's the update there as we continue our journey to become more competitive in Indonesia. On the next page, it will be the summary of the third quarter and 9-month EBITDA and net profits. I think that since the onset of this year, we're on the third quarter results. If you look back in the last 12 months, we have made a concerted effort for the audience to focus on our cash flow. While focusing on the cash flow, I'd like to highlight the fact that our EBITDA in the third quarter was a bit over 14 billion baht. I think this comes from two segments. One is the EBITDA from operations, which was slightly lower because of the lower chemicals trough. The margins came down, while the dividends from associates continues to be healthy. On a net profit level, because the earnings was hampered by the depreciation expenses of the Vietnam chemicals operations. We've adjusted the portion, so you'll see that the adjusted earnings is about 700, almost 800 million baht. I'd like to further add that an impact there was the inventory loss in the chemicals business in the third quarter. So that was the adjustment there. The next page highlights our performance for the 9 months. Here you will see that relative to last year, the reported last year was 38 billion, but there was an element of the 2 billion, which was in the form of interest rate swap. So in actuality, in terms of EBITDA from operations, we are neck to neck this year and last year for the first 9 months. And if you factor in the fact that there's been additional challenges this year, SCG did a relatively good performance here. And aided by the 12 billion baht in dividends from associates, EBITDA for the first 9 months is a healthy 44 billion baht. On a net profit level, you have to look at it from both aspects. One is reported, the other is the adjusted. The difference being that there was a revaluation of the Chandra Asri assets earlier this year. Next page, please. This is the picture on the capex and investments for the first 9 months. Compared to the first 9 months of last year, it's dropped dramatically from 48 billion baht to the current 22 billion baht. You can see here that we are emphasizing financial discipline, and the guidance for all of this year should be relatively muted of about 30 billion baht, so down dramatically from 4 years ago where we spent about 92 billion, and most of that was towards the chemicals plant in Vietnam. On the next page, these are the 4 strategic focuses for the company. The key word here is challenging headwinds. We've highlighted this in the third quarter results. Basically, it's both internally in Thailand and also externally outside of Thailand. The third quarter GDP numbers for Thailand just came out. It's only 1.2%, so very low growth environment. And at the same time, externally, global economy continues to be volatile. So hence, we are prioritizing financial discipline. We are focusing on cash flows, we're minimizing capexes, and we are divesting assets. On the second aspect is optimizing regional production. So we are, closing some assets that needs to be closed down and moving the availabilities towards growth that can also grow in other aspects. The third is penetrating and prioritizing high growth markets such as Vietnam. This is an area where you will see increased focus for SCG. You will note that currently Vietnam accounts for about 28% of SCG's assets, and it's a growing portion. And if you take a 2-step back, you'll see that SCG, which in the past 100 years used to be 100% owned in Thailand, our asset base now is about 50+% in Thailand. So the growing portion is ex-Thailand. And within that, Vietnam is at the top of the priority list. And the fourth strategy focus for us is extended portfolio. In the past, you've heard about HVAs, which is higher value-added products, and also green products. Both of these allowed us to gain additional margins. The new acronym or the new product segment that we're highlighting now is the smart value products. Smart value products, which was mentioned earlier, is basically products that is able to be purchased by the everyday consumer at affordable prices. Okay.